Good morning. We are diving into today's live training session. Week 4, we've made it through the first 3 weeks. And this fourth one really kind of rounds out our first phase. This one of just laying the foundation for your business, talking about some of the basic ways to spend your time, how to manage your time, how to do some tracking so that you get the most out of your time, all of those things. So I am excited today. Week 4, we're going to be covering your finances, what it is that we're tracking, and really where we're going to go with being able to make sure that your business is bringing in the money that you want it to, and on top of that, that you know where all of that money is actually going. So, quick recap. We had in week 1 all about time management, your personal morning routine, the way to spend your first few hours of your workday, and then being able to actually close the door on work and have something that marks the end of your workday. So that was week 1. Week 2, we discussed your CRM. Now, most of you probably have a CRM, more than likely provided by your brokerage. And this really is kind of your tool that's going to run your business for you, more or less. It's kind of that central hub that is going to allow you to do the marketing, the touches to your database, all of those things that need to happen on a regular basis, but you've got it all in that one central place. So your CRM, what it was, choosing one if you needed to, getting the basics of it set up, and then using that CRM on a regular basis. Week 3, we talked about measuring your business. So that was, talking about what are the tasks that you want to be doing on a regular basis. What are some of the bigger goals that you're actually trying to get to? And that's where we've had our do, doing, and done board, so that you could actually pay attention to each one of those categories. And then there's a spreadsheet also that was provided for you to be able to track your daily calls and then to track your pipeline as well, paying attention to who's there, when those people on that pipeline are actually going to be ready to do business, just so you can follow up and you can kind of look and see and map out where your busy seasons are going to be, and you've got a basic idea of some estimates for your income as well. So the big question really is, the homework from last week was to create that do, doing, and done list. Obviously not exhaustive, but enough to get you started to where there's not going to be a spinning your wheels, spending time on disparate projects that are not really building on one another, or not necessarily even building towards, the goals that you actually want. So that's that do, doing, and done. And then we've got the spreadsheet again to track those activities. So if you didn't get to either one of those, I would encourage you to go back. You can, put me on a faster speed, can run through last week's lesson, kind of explaining that do, doing, and done process. And then the spreadsheet is also in your course as well. So today we are getting into, like I said, the fourth and final section of our first phase, and that is tracking your finances. So we've got a few different categories that we're going to cover: business budgeting, how that's going to flow into your personal finances, expenses, taxes, and then I'll leave you with a few tools for doing some of that tracking. So why are we going to talk about finances? Now, this one in and of itself, this could probably take several weeks to really dive into. We don't need to go that deep. At this point, really what I want this to be is to get your mind thinking about some of these things from a business perspective, and then to be able to have those next steps that will be able to keep you on track. So back to the importance of being able to do this. As a real estate agent, your income is entirely in your hands. Yes, your brokerage gets a cut, their percentage. There are other things that are maybe going to be automatically, subtracted from it at the closing table. But when you get your closing check, the question then becomes, what do you do with it? If you're like a lot of people, you just deposit it and then, start spending it, and you're living more or less from one closing to the next, not necessarily having a strategy and a plan for how you're going to use your money. But understanding that this is in your hands, that that money that comes to you in that commission check or that commission wire, there's no taxes taken out of it. That money has to cover your living expenses as well as your business expenses. There's a lot of there's a lot of ways for that money to just kind of disappear, and you can't spend it more than once. So just understanding that you're coming at this from the standpoint of being a business owner. Again, that's our mantra. Small things, one at a time, but you're a business owner having to implement all of these little things. That is going to be a huge, just foundational thought and a foundational mindset carry us through this conversation about tracking your finances. Real estate is something where we've got a longer sales cycle. So if you've been an employee in the past, you have gone to work, you've put in your time, you've left at the end of the day, and on a regular basis, whether that's every 2 weeks, once a month, whatever it is, you get a paycheck. Whether that's direct deposited or an actual check that's handed to you, that money comes on a regular basis that you can plan on. Real estate doesn't work quite like that. You get paid when you have a successful closing, not before. So understanding that, and then going back to this idea of, again, we're thinking 90-day cycles. So with that, now we have to think about, okay, I'm making phone calls now. The phone calls that I'm making right now are going to turn into clients, active transactions, and then closings at minimum 30 days from now, potentially even longer. So the 30 days is a typical transaction window, though with today's market, there has to be a bit of flexibility when it comes to some of those closing times. So you've got a minimum of 30 days before you get to that closing check. And that's if that transaction stays together and you actually reach the closing table successfully. So it is important to realize that you actually have a pretty long runway that you need to follow in order to be able to go through this 30, 60, and 90-day cycle and not go completely broke in the process. Expenses can balloon like nobody's business. If you've been in the business at all, you'll probably recognize that. You've got your MLS fees, and you've got your licensing fees, and you've got marketing materials, and you've got, just all of these things. One of the big ones for self-employed people who end up doing a decent amount of driving, which if you're working with buyers and sellers, you're doing that, is the mileage, but you get a tax write-off for that. That's not money back in your pocket getting people from point A to point B. So it's one of those things where there is a lot of layout that can happen. Those expenses can grow astronomically pretty darn quick. So you definitely want to keep an eye on those. So those are some of the reasons why talking about your finances, even from a high level, is an important thing to cover at this stage of our course. So, business budgeting. Okay, everybody usually has a pretty negative association to budgeting. Just that very word can make some people's skin crawl. Most of the time, people look at it as something to be really restrictive, something that is going to take all of the fun out of earning their paycheck, all of those kinds of connotations that just come along with our approach to money. Now, I don't think that it needs to be that way. And if you can reframe this in your mind to where it's like, you've got a pie, you're divvying up that money pie, that is going to give you a little bit more when it comes to actually being able to think about this in a way that's going to be productive and more useful to you as your business continues to grow. So when we talk about a business budget, it really needs to tie in with your business plan. And what I mean by that is if you are not planning to be active for half the year, you're probably going to have to change the way that you allocate money. Because if you have to have, annual expenses, or if you've got a whole bunch of expenses that really will cover the entire year or a larger section of time than you're planning on being active. Now you've got to think about how much time and how much money you can bring in that smaller period and make sure that your expenses don't exceed that. Give yourself a method for assigning your commissions. Now, what this is really going to tie into, get into this in the next slide or two, is talking about giving your dollars a job to do, every single one of them. So if you've got a check that comes in and then it just sits in your bank account and you take care of running your life and your personal expenses and your business expenses out of that one place, you're going to end up with some very gnarled up business accounting. And it's also going to mean that there's not going to be a clear-cut and defined way of being able to look at your finances, figuring out how much you're actually making, how much your business is spending, etc. So giving yourself that method for assigning your commissions. We're going to really, my favorite way of approaching this is something that there's variations on it, but there's an author named Mike Michalowicz, and he's got a book called Profit First. And essentially, the premise of the book is that most people, most small business owners, most entrepreneurs don't run their business off of their profit and loss statements. They don't run it off of a lot of the accounting documents that you might get. They run it off of their bank balance. What's in the bank? That's the money that I've got to spend. And that's just the way that our brains compute it. So what his recommendation is to bring in your income, have it all go into one place, and then from there, split it out by percentages into the different buckets. So for example, your salary, we're going to say, whatever that percentage is of every check is going to go and get transferred to your personal checking. And then you've got all of your expenses. So you've got your operating expenses account that you are going to be able to pay business bills from. Taxes. This is a big one, and we will get into this more specifically in just a bit, but taxes for self-employed people are significantly different from somebody who is a wage earner who's getting a W-2 at the end of the year. So just understanding that there is a dramatic difference. And again, that paycheck that you get, that commission check, there are no taxes taken out of that. So you're responsible for taking taxes out of that, setting them aside, and then we'll get into the deposits and all of those kinds of things in a bit. And then finally, profit. So this one is kind of that fun category where it doesn't have to be huge, but the idea of profit is you've got your income, you've got your expenses, subtract your expenses from your income, all of your expenses, and whatever's left over is technically your profit. Now, most businesses, most small business owners do not run a business with the concept of profit being there at all. So having a profit bucket, even that really small percentage, is just one of those ways of building that mental discipline to actually be setting that money aside. What you do with that, we'll get into that a little bit later, but it is a bucket that I highly recommend, putting some money into. And then probably the biggest thing to do with this whole concept of having a business budget is actually to have business checking accounts. In a previous career, I worked as a tax professional, and it was one of those kinds of things that when you're dealing with businesses, you want to have separate accounts for business expenses versus personal expenses. So almost every bank has the option of having a business account, and I would highly recommend going and finding one of those places and actually creating a savings account and a checking account so that you can actually keep those business expenses separate. Now, with that in mind, credit unions are a fantastic place to do this. Most of the time, they're not going to have as high of fees. They're a little bit more business friendly sometimes. So you can look at the big banks for sure, but credit unions are also a great option. So a little bit more of the technical how we're going to do this. So just like last week where I had a measuring and tracking spreadsheet for your business activities and your pipeline, I'm also going to be providing you a spreadsheet for your finances. So that is going to be kind of a baseline that you can start with. There's going to be ways that you can edit your percentages so that it's not set in stone. But essentially what that is going to be, you can either use that or use that as a template to then be able to track your business expenses. Set your percentages. I will break this down. Actually, we'll just flip over there real fast. So when I'm talking about percentages, what we're talking about is this idea of taking whatever that commission check is and then splitting it up by percent into different buckets. Now, this is not a graphic that is showing this exactly, because you'll notice that there is one section that's huge and another section that's small, and both of them are labeled 35%. So this is not accurate as far as that pie graph is concerned, but the principle still holds. So let's talk about it this way. Say we had a $12,000 commission check that we got from a closing. $2,000 going to go to the brokerage. That's, just right off of the top. That $2,000 is their percentage, whatever that was. So you are left with $10,000. Now, $10,000 feels like a huge sum, especially if this is one of your first closings. That's an amazing check to get. The temptation is going to be to deposit it and then go start spending it. But this is where having this discipline of tracking your finances and being able to know how you are going to handle your money will put you in a good place. So we're going to say $3,500, that's your salary. That goes to you. So out of that $10,000, you get $3,500 and you transfer it from your business account where you deposited that check, and it goes into your personal account. All your personal expenses are going to run off of your personal account. Pardon me. The next one is our business expenses, another $3,500. You may not need to spend all of that right now, and that is perfectly fine. It's probably a really good thing if you don't have to spend $3,500 right now. But this is, again, one of those cumulative things. There are going to be times of the year where business is slower. You're still going to have some expenses, so being able to have a buffer, having extra money in that account is never a bad idea. So decide what that percentage needs to look like. In this case, in this example, 35%. Taxes, we're going to call it 25%. Now, I am going to recommend that you strongly go find a CPA, an accountant, a tax professional who understands the real estate world, the industry, especially the fact that there's not consistent income, and is able to help you figure out what those what that tax percentage really should be. It's one thing that you can project what you're going to make, and you can then set aside a percentage based off of that. But most of the time, being able to look at it quarterly is going to be the better way of doing it, so that, again, you're not putting a ton of money into that tax account, but also you don't want to be short when tax time rolls around. And then finally, that profit, that 5% that we're just going to set aside. And every quarter, essentially what happens is half of that profit account gets just set aside for a rainy day. You've got a huge business expense that comes out of nowhere, or you've got, a piece of equipment, a computer, whatever it may be that you're saving up for. That's kind of what that's going towards. And then provided you don't carry any debt, the other half of that profit account is yours, just for fun money. If you have some debt, the recommendation is to keep paying that half of that profit towards the debt until all of that is gone in your business. But at the same time, that is its own incentive to get you to the point where you are operating debt-free. So that's kind of the breakdown here. So when I'm saying set your percentages, that's really what I'm talking about, is figuring out, okay, we've got, these 4 different categories that we are going to go through, that we are going to put money into every time we pay ourselves. And so it's going to be one of those things where setting those percentages, really thinking it through, understanding that right now you might have a little bit more on the business expense side, which means that your salary, the personal money that you've got isn't necessarily going to be as large. That can balance itself out eventually, but usually early on, there are going to be some upfront expenses that will probably take a little bit more. List all of your expenses. So this is another one of those where it's hard to know what you don't know, but there are some things that you do know. So for example, you know that you've got licensing fees on a regular basis. You know that you've got an MLS fee that's due either once a month or quarterly or annually, whatever that may be. You know that you need to put some money towards marketing. So if you're like sending mailers out on a regular basis, probably ought to go ahead and actually put some money aside and plan for those expenses. So those are the kinds of things where you should go through and list those expenses. Things like your phone, things like internet, those actually, a percentage of those at least can be used as an expense. So just paying attention to some of those things as you're going through when you're listing all of your expenses and understanding what can actually be counted as an expense. That will be a helpful exercise, just so you have an idea. Okay, again, on an annual basis, this is what my expenses are totaling up to. This is how much I'm setting aside, projected numbers on your income and then that expense percentage. So now that you've got the opportunity to say, okay, my expenses are here, my projected expense account is, XYZ number. And then from there, you can start to look at, okay, do I have a little bit of margin in my total expenses? What can I cut if you need to? But being able to look through and list all of the expenses, the softwares, everything that you actually use to run your business, that is going to give you kind of that bird's eye view of where your expense percentage needs to fall. I would not recommend splitting up every commission check as it comes in if you can avoid it. Take a couple days a month, 1 day a month, whatever it is that is going to be something that you can be consistent with, and then go through and just make sure that you are making those splits, those percentage divisions at those times. Doing it this way kind of frees up your brain. You're not having to think about it a ton. It's not something that's always just going to be sitting there nagging at you. You know that you take a look at your finances, on the 10th and the 25th of every month, or the 15th of every month is the day that you set aside time for that. The one challenge with this is obviously that 15th, it moves around. So you might switch it up and you might say, okay, I actually want to do this, every other Friday, or whatever the case may be, every other Tuesday, if that works better. But finding a rhythm where you are doing this consistently, where you're taking a look at your expenses, you're dividing up the income that you've received, and then paying any bills, putting stuff into your tax deposits, etc. Speaking of tax deposits, so again, as a self-employed person, with the way that your taxes are going to work, you have your regular income tax, but you've also got something called self-employment tax. Now, I don't want to go down this rabbit hole too very far, but essentially what happens is you have your income, you have your expenses. Income minus expenses is what you are taxed on for self-employment. The self-employment essentially is the Social Security and Medicare portion of the tax liability. So when you have a W-2, you'll notice that there is a box that has your total wages, you've got your income tax withholding, you've got your Social Security and Medicare wages, and then the amounts that are taken out for those. You're not going to get a W-2 as a real estate agent. So what happens is now you have to be the one to pay that difference or pay that part of the Social Security and Medicare. So this is where having these quarterly deposits, having a tax account and percentage of your commissions that you are putting towards it. That's why this is important, because once a quarter, you are going to want to send or make a deposit towards your tax bill. You can do this all at the end of the year. There are penalties that can be assessed if you have a tax balance that is more than $1,000 and you're self-employed. So it is recommended to go through and do this quarterly. It also helps with just, again, not being tempted to spend that money that you set aside for taxes. So that's kind of a quick approach to the way that taxes will work and the recommendation for making quarterly tax deposits. Those essentially are due the 15th of each month after the next quarter. So for example, we are headed into October. So October, November, December is Q4. Your next deposit then would be due January 15th. And that cycle continues. This is, again, where I would highly recommend finding a tax professional to actually help walk you through what that is looking like for you, what you can expense, what your income looks like, and based on that, figuring out where your tax percentage should probably fall. Don't operate off of projections. You don't have money in your pocket until you've closed successfully. So this could probably be better stated: don't spend money that you don't already have. I cannot tell you the number of times that something goes wrong in that last week or two, and if you've already spent that commission money, you are now probably in some pretty hot water, because at this point you were planning on that commission check coming in, transaction fell apart, money's already spent. Now what are you going to do? It's not a pleasant place to be. And so the biggest thing that I can recommend as you work through these financial concepts is keep your expenses super lean. You have to have some operating capital in order to be able to run your business, for sure, but don't spend money before you've actually closed. That will bite you in the butt, and it is not a pleasant situation to find yourself in. Very, very stressful. All right, talked through that one. So how then does this affect your personal finances? So in a very similar way, let's go back to our example of, $10,000 commission check, 35% of that is your personal. So that $3,500 now, that's in your personal checking account. How are you spending that? I'd recommend going through a very similar process as we did for your business budgeting. Go through, look at all the expenses that you have. Some of them are going to be fairly fixed, like your rent or your mortgage. Utility payments will fluctuate. There's going to be certain things that are going to be pretty standard, and there's going to be others that have a bit more variety to them. So starting to bucket some of those different categories for your personal expenses, I would recommend doing the same thing. There is going to be a second tab in this tracking spreadsheet, this financials tracking spreadsheet, that is going to be devoted to personal budgeting. So there are tons of apps out there, but sometimes it's good to get everything just in one place to start there. And then if you decide that you want to go with a budgeting app just to help you track some of those things a little bit more easily, that's obviously an option there. Expenses. Okay, hearing me talk a lot about it, but this is a totally different business model than if you are an employee somewhere. You are now self-employed as a real estate agent. So your expenses are going to be a direct subtraction from your income, and then you are taxed on whatever is left over between income and expenses. So if you earned $50,000 in a calendar year and you spent $25,000 in expenses, you're not going to get taxed on the $50,000. You are taxed on the difference between those two, which is $25,000. So understanding that business expenses are a huge opportunity for you to be able to lower your tax burden. Now, you do have to be careful. Not everything that you think might be an expense is an expense, and there might be a few things out there that you're not thinking of as an expense that would be. Again, this is where talking with a tax professional who knows the real estate industry and also knows some of the things that are specific to your area. Every state has different things when it comes to state taxes. Yeah, tax law across states is different. Obviously, we've got the federal tax code here in the United States, but that is a confusing mess. It it truly is. So it's probably best to sit down, once a year, once a quarter, if available, if you can make that happen, and talk with a tax professional. Understand what business expenses you can write off, understand how you need to track those, keeping receipts, those kinds of things, so that it is provable should the IRS ever ask you for support for those expenses. You've now got a way of going back and saying, yes, this is that expense. And this is how it was related to the business. So it's one of those kinds of things where understanding what you can deduct, what you can't deduct, and being able to take advantage, honestly, of every deduction possible. There's absolutely nothing wrong with taking deductions, and you totally should. It's actually illegal to not report all your income and all of the expenses in order to jerry-rig the numbers and make them look a certain way. So you want to take all of the legal deductions that you can when it comes to being able to reduce your taxable income. Ballooning expenses will quickly sink your business. Like I mentioned a little while ago, there are certain things that you have to have in order to operate your business. There are certain things that are nice to have when it comes to operating your business. So paying attention to those expenses on those set days that you are going to, divvy up your income for the past month, or whatever your periodic scheduled appointment for finances is going to be. Take a quick look through credit card or bank statements, whatever it is that you're using, because you do want to make sure, obviously, that there's no fraud or anything like that happening. But you also want to go through and say, what is it that all of this money is going towards? Those expenses can add up really, really fast. And if you're not paying close attention to what's actually going on, where that money is actually going, you can have subscriptions that you're not using anymore, and that's just sucking that money out of your account. So definitely recommend keeping an eye on those expenses on a monthly basis, quarterly at the very most, so that you know where that money's going. You're not having money being spent on either something that you're no longer using or something that's redundant. And then understanding the difference between expenses and investments. So this is a little bit more in the weeds when it comes to just the way that you're thinking about spending money. Expenses, as I've listed them here, are really there. You can't do anything about them. In order to operate as a real estate agent, you have to spend this money. You have to have access to the MLS. That is where most of your information is going to come from. That's how you're going to see how homes are on the market or list your home. So that one you don't have any choice in. MLS dues, that's an expense. It just is what it is. License fees, depending on your state and your jurisdiction, whatever it is that you have to have in order to be able to actually practice as a real estate agent. Those license fees, you have to pay them in order to have your business. Bank fees, pretty much the same category. It's sort of a necessary evil. Again, having that business bank account will make your life and your finances so much simpler. Not to mention, should the IRS ever come calling, now you've got that division between business and personal. So bank fees are another one where, again, it's just part of doing business. Your broker split. So if you're at a brokerage where it's a 30-70 split, that 30% of your commission that goes to the broker and the things that they provide for you, that's something that, again, in order to do business in your brokerage, deal with. So all of those things and more would fall into that expense column. But investments are something where you can expect, or you should expect, to actually have some return. So one of those would be outsourcing, hiring a contractor or employees, wherever you are in your business, or if you get to that point, being able to say, okay, here's some work that needs to be happening in my business. I don't want to be the one to do it. I don't have the time to do it, whatever the case may be. And being able to actually get some of your time back. You are investing money so that you can get some of your time back. So in that case, that would be, yes, it is still an expense. Yes, it's still deductible from your income, but it's not an expense in the same way as dues and fees would be. Marketing, same thing. You are putting marketing out into the world with the expectation that you are going to get some return on that expense. You are going to send out 1,000 postcards, and you are going to get, 2 people who want to list their home with you. So right there, we've got money going out with the expectation of money coming back in. So that would be more of an investment category expense. Client gifts, same thing. Creating that goodwill, creating the memory, having it, depending on what that gift is, having it be something where they've got it sitting out, really cool piece, and now they've got conversation that can go on around that, which has the potential for leading to referrals. So client gifts would fall more in this investment category. You don't have to spend that money, but by spending that money, there is a likely return that you're going to get in one way or another. Training, so courses, classes that you have to take, sure, that could fall in here, but essentially expanding your understanding, your knowledge, and your ability then to serve and operate better as an agent. That could also fall under this investment column. So I guess in a lot of ways, yes, all of these are expenses. You're not going to see, when you look at your P&L, that you've got expenses and investments. But this is more of something to just kind of have in the back of your mind when it comes to being able to look at the types of expenses that you're spending money on. Is it something that basically you have to have it in place in order to do business? Or is it something where it is going to make your life and your business better? It's going to help your business grow by putting that money out in whatever form it is. That would be more of your investment. Now, taxes. Already talked a decent bit about this. I mentioned before that I was in the tax profession previously, and I cannot tell you how many times worked with people who were self-employed, who either didn't have good records, who were pulling numbers out of their head instead of actually having things to support. Coming into the office with a shoebox of receipts from the entire year. They hadn't categorized anything, it's just stacks of receipts that you have to go through. So there's a lot, there's a lot of things that we as business owners have to do. And usually the accounting and that kind of thing is not in our wheelhouse. It's not why we got into business. So with that in mind, again, it is important to understand the distinction between being an employee, getting a W-2, having really no expenses that you can put against that, having taxes already taken out of it by the time it hits your bank account, those kinds of things, and being self-employed. 2 totally different worlds when it comes to the way that your finances are handled. So we've already gone over this a bit, but one of the biggest things that I just want to emphasize again is don't dip into your tax account. It is a very, very unpleasant thing, and the shock of sometimes that tax number when it comes down to it, once that tax return has been put together, it can be very, very surprising. This is again where putting aside money on a regular basis, that percentage of every check that comes into your account, that's where you're going to be able to have that peace of mind that you are not going to have an astronomical tax bill at the end of the year when you're filing your tax returns. So with that in mind, we've already gone through a decent amount of the details behind this, But again, the biggest thing that I would recommend is find a tax professional who understands the real estate industry, who's willing to sit down and work with you and explain stuff to you as much as you want it explained. And then from there, make sure that you are just staying on top of making those tax deposits, not letting tax time creep up on you. Well, reiterating a lot of what I just said. I want to elaborate on this a bit, just because it is one of those kinds of things where you don't want to be in the tax world. Otherwise, that's where you would be with your life. You want to be in the real estate world. Planning is a big part of that. And I'm not just talking about tax planning. I'm talking about, being able to extrapolate out a few years, being able to look at the numbers and say, okay, if this is what we're dealing with right now, what is the scenario if this changed? What happens, or what would you need to be bringing in order to bring on a part-time employee? Those kinds of factors. Talk with that tax professional now to avoid those really unpleasant tax bills. Everybody goes in and drops their stuff off at the accountant once a year. And if you're self-employed, that honestly is not enough. You need to be keeping track of what's going on throughout the year and making adjustments as needed. Talked a little bit about that self-employment tax and the income tax. So again, there are essentially two different taxes that you are going to be paying when you're an employee. All of that, again, is taken out before you actually see the money in your account. So right now, what you have to guard against is thinking that just because you see money in your checking account does not necessarily mean that you can just spend all of it. There are definitely a lot of things that you need to be splitting that up into, hence this whole tax conversation. Quarterly tax deposits. So talked a bit about this earlier as well, but at the end of each quarter, the 15th of the next month, if you've been setting aside that percentage of each of your income and putting it into your tax account, now taking that tax money and then paying that quarterly deposit. Most states have a an income tax. So you will likely want to do it in both your federal and your state. So to the IRS and to your state government, you would be paying those taxes on a quarterly basis. Some states do not. There are about 6 states, I think, here in the United States that don't have income tax requirements. So if you're in one of those, then those tax deposits would end up going directly to the IRS. Tracking tools. So you can do this in a number of ways. We've talked about a lot of different things. We talked about, splitting things into percentage. We've talked about paying attention to where your money's going and where your expenses are. There are a few different things that you can use to simplify this. You can't just use a spreadsheet. Good old spreadsheet will do the trick. However, there are some other tools that are either free or don't have to be super expensive that will make you and your accountant's life a bit easier. Most agents, again, are operating off a bank balance. Kind of dangerous to do that just because everything that's in that bank balance or that bank account is not necessarily there for you to spend. So keeping that in the back of your mind, what's in your bank needs to be run through a few different filters before you just start spending. There is that spreadsheet that I'm going to provide to you, so you can definitely use that. Again, it will do the trick. It's pretty simple and straightforward. But if you wanted to expand beyond that, we've got QuickBooks. So that's probably one of the most famous accounting softwares out there. QuickBooks for entrepreneurs. And so that's an option. Harvest is one. That's another expense tracker. I don't believe, the last time I looked at it, I don't believe that it actually tracks your income, but it's more of an expense and mileage tracker. And then you can also talk with a tax professional. There are actually quite a few financial and budgeting softwares out there for business, and some accountants have preferences. So what I would recommend doing is talking to whoever it is that you decide to work with and figuring out what that system needs to look like when it comes to getting those expenses and that income, all into one central place. And then again, schedule that monthly and quarterly review of your finances. So monthly or twice monthly, splitting up that income as it has come in over the last month. And then quarterly, making your tax deposits, double checking your expenses, and chatting with your accountant as needed. There's a ton of business books out there. Not necessarily all of them are good, but one of the guys that I like listening to and reading his stuff is Donald Miller. He's famous for building a story brand. That was one of his early business books. And one of the things that he said in one of his more recent books was, in every decision you make, and that's specifically financial and business decisions, ask yourself how that decision will affect cash flow. So cash flow is that ability to have that liquid cash, money coming in, expenses paid out, and you've still got liquid money in the bank. So that idea of cash flow is just making sure that not all of your dollars are tied up and again spent before you even get them. Cash flow is what's going to be the difference between whether or not you are actually going to be able to survive as a realtor. If you have more expenses or equal expenses to the money that you're bringing in, you don't have any cash flow. You've got either negative cash flow or a very stagnant cash flow, and that is not why you got into the business in the first place, and that is not going to be a healthy place to stay either. So again, think about your decisions, whether or not to sign up for something. All of those details when it comes to actually running your business will have an impact on your bottom line. So keep that in mind. For this week, we are going to keep it pretty simple. First thing that I'd like for you to do is to set up a business bank checking and savings account. Most of the time they come together, or they'll ask you if you're setting up a checking account, you want to put a savings account on there as well. Sometimes there are minimum dollar amount limits, so definitely look into that. But again, credit unions are a good place to start if you've got that option. Big banks can also work for you. Sometimes they're not going to be as competitive with their options. Use the spreadsheet to track your finances. So again, money coming in, that's going to go in one area, and then we've got all of these different buckets that we're going to be putting it in. So you will see that, you'll make those transfers based on those dollar amounts. And then find an accountant / tax professional. Not all accountants do taxes. Not all tax professionals do the day-to-day accounting. So if you find one or the other that you really like, more than likely they will have a recommendation for finding that other person. A lot of accountants will be able to help you on a monthly and quarterly basis, whereas that tax professional might be someone that just you work with once a year to actually file your taxes. So those would be my recommendations. Set up this bank account, use the spreadsheet, start getting familiar with that, and then find that tax professional / accountant who's going to be on your team. And then finally, our Q&A call this week is going to be at a different time. We're going to do it this week at 8 o'clock Pacific Standard Time on Thursday, September 30th. Next week is going to be a little bit interesting and doing a bit of traveling, so that's going to affect a few of our calls. Starting with this one, again, this coming Thursday, we're going to be doing our Q&A / troubleshooting call at 8 Pacific. So come with your questions. You will get a reminder sent out and a link to be able to join that call. I'll look forward to seeing you then.